Are you aware that federal government of Nigeria directed banks and fintech to be collecting and remitting a 7.5% VAT on banking charges and fees effective Monday, January 19, 2026? So how does this affect you? What do you need to know? And how is it important for everyone in Nigeria? But before we start talking about that, let's even look at what is value added tax. VAT is a consumption tax which is applicable to the value added at each stage of the production and distribution of goods and services. So in Nigeria, this tax is normally paid by the end customer, but businesses, which include banks, fintech, collect it and remit same to the tax authority. So it's not the income of your bank or fintech, but rather only operating as an agent of the government. So let's quickly look at the VAT process flow. Raw material supplier. The raw material supplier is selling to manufacturer, is selling the raw material at 100. So he's charging VAT of 7.5, meaning that he's collecting 107 naira 50 kobo from the manufacturer. So he will be then remitting 7.5 naira to tax authority. At the stage of manufacturer, he added value by converting raw material to finished good. So he's selling at 200. For him, he's charging VAT of 15. But don't forget that he suffered VAT of 7.5 naira when he bought raw material, which means that he will only remit 7.5 naira to government, as he will be deducting 7.5 naira that he already suffered at the point of buying the raw material. So at the level of the retailer bought it at 200. He also added value by moving it from manufacturer and making it available for final customer. So retailer is also added 200 naira and he's selling at 400. Meanwhile, he will be calculating VAT of 30 naira. But don't forget, when he was buying from manufacturer, he also suffered VAT of 15, which means that he will remove the VAT of 15 that he suffered and only paid 15 naira to tax authority. Final customer is the one that's going to bear the burden of the whole of 52.5 VAT because he is only consuming the product and is not selling it. It's not adding any value. Remember that value added tax is only applicable when you're adding value to a product or service. So then, how does 7.5% VAT on digital banking affect you as a person? But before we talk about that, let's quickly remind ourselves that this charge that we are talking about is only on the bank service charge and fees, and it's not applicable on the actual money that you are transferring. You need to scratch your head about this, or you don't need to have headache on it. Just sit down and let's look at three examples here. So the first one is the banking transfer fee. This is 50 naira and the VAT on it will be 3.75. So meaning that the total charge will be 53.75. So think about it. You are making transfer of 5,000 naira and there is 50 naira charge. So the additional charge now will only be 3.75, which is applicable on the 50 naira and not on the 5,000. Similarly, if you are using money transfer, mobile money transfer is 200 naira, as the example that we have here, and we have 7.5 VAT on it, which is 15. So the total charge becomes 215 naira. So again, if you are making transfer of 20,000 naira and they are charging you 200, so it means that the VAT is only 15 naira, which is applicable on the service charge and not the whole of the 20,000 naira that you're transferring. So, and the third one that we have here is card issuance fee. So if your bank is charging you 1,000 naira for issuing you ATM card, the VAT will only be 75 naira, and the total charge becomes 1,075 naira. So let's look at the affected transactions. What are the banking transactions that will be affected by this 7.5? The first one being the mobile banking transfer fee, USSD banking transaction fee, card issuance fee, POS transaction fees, and other electronic banking service charge. This 7.5% VAT is not applicable to one, the actual amount that's sent or received. So if you are sending 10,000 naira, the VAT is not on the 10,000. If you are receiving 50,000 naira, the VAT is not on the 50,000 naira, but rather on the bank charges. Interest earned on savings or deposit accounts. Number three, charges unrelated to service fee or digital banking. So, why introducing this policy? What's the benefit to the government and Nigerians? Number one, expansion of tax net in the rapidly growing digital economy. The digital economy is really growing, and the government is tapping into that by expanding the tax net, bringing more people into the tax net so that more revenue for the government. Number two, standardization of VAT collection across all the electronic financial services platforms. So we have different people carrying out transactions using banks, using fintech. The government is trying to bring everyone into the tax net. Then alignment with the government target to increase revenue. Definitely the government want to increase revenue, and this is an avenue to achieve that. And definitely availability of funds for public services like education, health, and infrastructure. So when they are able to get more revenue from people, then there'll be more money to serve Nigerians. Hopefully, this will be utilized for the benefit of Nigerians. Thank you so much for your time. See you next time.